How can I avoid risk selling my business? I'm Jeramiah Townsend, business broker advisor. I help people buy and sell companies. So before we get into this one, how you can avoid risk in selling your business, I want to make sure that you like and subscribe, hit the subscribe button wherever it is, and make sure to leave a comment so I know that I'm providing good value for you. So today I'm going to give you five things on how to avoid risk in selling your business. But I want to use a caveat here. You have to be careful about this. Every business deal always has risk. So number one, hire an advisor. Anytime I buy a company, even though this is something that I do on a regular basis, I always try to get a second opinion on things. Yes, even me as an advisor, when I'm buying a business for myself, I get a second opinion. I always require that. And even as a broker in certain situations, I will ask another broker friend of mine or another business advisor friend of mine to review some of the nuances in the deal. It's important to hire an advisor to give you accurate information. They do it all the time. They're professional. It's good to be like, what do you think about this? Because they're really good at what they do. They're really good at it because they do it all the time. You're really good at your job because you do it all the time. And you know that hiring you to do something is going to be way more cost effective most of the time than somebody else trying to do it themselves when they don't know what they're doing. Buying a company, one of the most important things to get right. You do it wrong, costs you tons. So hire an advisor, hire a business broker to help you out. When you're selling your business, hire the advisor to help you sell the business. They'll help you negotiate. They'll help you set price. They'll walk you through everything. They'll even help your buyer get through the hurdles to buying a company. Number two, avoid risk in selling your business by getting a business valuation. You need to get a business valuation so you understand the real value of your company. If you don't understand the true value of what you're selling, chances are you're going to overprice it. Now, I will tell you from personal experience, the average business owner who has not bought and sold a business overvalues their company. And this is not coming just from me. This is coming from the IBBA, International Business Brokers Association, and several other business brokerage associations. The average business owner who hasn't sold a company will overvalue their company by anywhere from 25% to about 300% on average. It's like having a car and you think your car is worth more than it really is. Unfortunately, that just happens. So make sure to get a business valuation so you can get an honest third-party perspective on what the value of your company is. Now, a more knowledgeable business investor or a business buyer will be more tuned in. And I love working with those people. They're very realistic about, my business might be worth more, but I'm going to sell it for this because I know I could ask more, but I don't want to wait forever to sell it. I'm just going to be fair. So get a business valuation. It's a great thing to do. It gives you an assessment, a business assessment, lets you know how much your business is worth and things you can do to improve it, maybe even to polish it up and get a higher value in the end. The third thing you can do to avoid risk in selling is to get the right terms. The right terms are critical when you're selling your business. You have to make sure that the terms, not just the price, but the terms will help you avoid risk. So for example, if this buyer wants you to carry the note, I'm a big fan of carrying a note, selling a business. Even when I'm selling the business, I've carried notes for a lot of my business buyers. It's a good thing to do. It helps make the business sell. But if they want me to carry 100% of the note for a long period of time, generally, I want to make sure I'm getting paid well on that and I'm getting a good return on that. So that's something to think about. Yeah, you have to agree to the terms. Number four is you want to make sure to if you're selling a business to avoid risk, you want to get paid as much upfront as you possibly can. Now, I do want to say that if you do require 100% of your cash upfront and you're not willing to carry any note or anything like that, there's this great book written by a guy named Bob Ross. He's been a business broker for 40 some years. He was introduced into the Texas Business Brokers Association. Fantastic book. It's about $100. He wrote it on business brokerage. And on his experience, he said that if you require 100% cash up front, statistically, on his experience, you get maybe 50 to 60% of the value that you might otherwise get if you finance the purchase or help finance the purchase. And that's been the experience of a lot of other business brokers that I find from those who want all cash up front. So it's okay to take payments. It's okay to get bank financing. There's lots of ways you can structure those deals where you get the majority up front. But you do, to limit your risk, you do kind of want to get a sizable chunk. And I always recommend, there are reasons to sell and do a large owner carry, but you can also sell it and maybe do a 50% owner carry and have them come up with the other 50% through a bank note or bank financing. And so there are different ways of doing that. Now, again, you're not going to make as much money as if you carry the whole note. If you carry the whole note, you can charge interest, you can charge a higher sales price, lots of different things you can do there to help the buyer out. And that leads me to point number 5, help the buyer after the sale. If you want to avoid risk, and let's say they owe you money, whether you've agreed to an earnout or whether you're doing an owner carry or anything along those lines, make sure to be available to the buyer after the sale. Make sure to give them sufficient training. It's standard to give at least 30 days of unpaid training after the sale. But also you might want to provide additional assistance. And with the SBA, you're allowed to help that company for up to 12 months and without compensation as part of the sale. Now, there are different ways that you can structure these things, but helping the buyer after the sale will help guarantee that you lower your risk and make sure that they make their payments to you. I'm Jeramiah Townsend, business broker advisor. These are just some of the ways that you can help avoid risk in selling your business. And of course, number 1 was hire an advisor. Hire somebody who has helped buy and sell companies. They will help walk you through the process and make sure you're doing it the right way and the smart way. As always, like and share the video. Please hit the subscribe button, and I will look forward to seeing you in our next video.